enable. WazirX and CNBC TV18 present Crypto, Digital Assets of the Future.
Hello and welcome to this special series. WazirX and CNBC TV18 present Crypto, Digital Assets of the Future. While the frontline cryptocurrencies with the likes of Bitcoin, Dogecoin and Ethereum have primarily been in the news for their erratic price moves, there is much more happening at the background of these digital currencies that is largely shaping up the future of the financial world. One such technology is DeFi or Decentralized Finance, which seems to be strengthening itself as an ideal product market fit for public blockchains. It is a financial system that is setting new standards for access, resilience, and transparency. Our theme for the conversation today is understanding DeFi and DAO, its impact on the current financial system and the players in the market such as in international remittance, lending, borrowing, derivatives, trading, payments, and asset transfer. To discuss that and more, we are now joined by Eduard Jubany Tur. He's founder Thali DAO and he joins us on the show. Edward, hi, thank you so much for taking time out. There is so much conversation that is going on when it comes to these topics, but I want to start from the scratch for the uninitiated. Why don't you start by telling us on what DeFi is, what has been the kind of growth that we've seen in the last couple of years on this one?
Great. Thank you for having me. Much appreciated. So just imagine that DeFi was something that was born out of the first ICO boom. And, someone started talking in the industry about how we could use the building blocks of blockchain to enable decentralized finance where users and investors can, self-custody and have a higher degree of autonomy. And out of these initial, sessions and thought process came out to be the DeFi ecosystem that we know today. The DeFi ecosystem, as we know today proper, was basically born in the last 2 years, and it quickly grew throughout last year and this year. We're currently sitting at about $110 billion total for the DeFi ecosystem, whereas barely a year ago, we were actually talking about $1 billion. So the growth has been staggering, to say the least.
So, Edward, how would you say, what is the big deal about DeFi? How does one invest into this? And what are the initial few names that you can recognize with?
So we started seeing, some first projects coming out early last year that grew to traction. A few of them could be MakerDAO, Curve, Aave. And these protocols were very much oriented towards offering lending, as well as stablecoin mechanisms within Ethereum ecosystem. And these systems quickly grew traction, and we saw a second wave coming up with the likes of Uniswap, as well as synthetics that offer more complex trading mechanisms, as well as decentralized exchanges. As you might be aware, throughout the end of last year, we saw the growth of the retail space as well, coming in force into the DeFi ecosystem, and that propelled the entire ecosystem forward to actually grow much faster, bring new teams into play, and get more engineers developing new solutions. There's been several phenomena that could be interesting to highlight. One is Binance Smart Chain ecosystem that, despite its centralization concerns, has managed to bring a new wave of retail users on board and offer an experience that is easy and accessible for them through the likes of WazirX or Binance. As well as, on Ethereum, we've seen everyone that was basically already trading in Ethereum flocking into these new platforms and tools to leverage new yield opportunities.
Edward, when it comes to geographies, where do you see major growth coming in? Because I know it started in US and then we've seen China numbers being strong, Europe seems to be doing good, and a lot of countries in Asia seem to be picking up. So when you look at DeFi movement right now, what geographies are doing the better?
So you're correct in assessing that initially most of the growth was coming from emerging markets. And primarily you could say that it was an ideological growth where a lot of people who were hardcore believers of cryptocurrencies and that believe that, this is a new enabler of freedom, of financial freedom and autonomy for those who use it, were the first adopters of these technologies. And that led to the creation of the DAOs, the Decentralized Autonomous Organizations. Now, there's two camps for DAOs that you could think of. One is the camp that primarily believes that DAOs are community-oriented entities that allow for decentralized governance of ecosystems and platforms and services. And then you have another camp that believes that we should be able to use smart contracts to automate the entire existence within the blockchain. And these autonomous organizations should be able to operate pretty much based on code. And out of these two camps, we've seen all this growth of DAOs that has come into being. And initially, out of these Western markets, we started seeing a tendency, towards obviously the Chinese markets, the Japanese, South Korean markets that were already there to begin with. And now we're seeing another wave coming from Indonesia, Thailand, India, where users are seeking yield opportunities and they're finding easy retail onboard channels through centralized exchanges. Now, the key point to consider here is that to enter DeFi, you need that easy on-ramp experience from centralized finance still to this day.
I understand, as you're saying, that the numbers here have been increasing. But when you look at DeFi, there are so many questions when it comes on to this one. How would you look at DeFi? Is it going to be on lower liquidity altcoins or the high volatility Ethereum or Bitcoin as we see it right now? How do you see markets maturing, stabilizing from here on?
So what we're seeing now is a convergence of high yield deposits and liquidity pools into lower yield environment that matches more closely what we've seen so far in traditional finance. And this actually poses very interesting questions because in the last year, all these new platforms that have provided rewards, airdrops to the users have driven high yield opportunities and a lot of user onboarding. So we're now at an interesting crossroads where we've seen yield decreasing, converging with the traditional finance world. And as such, remains the question of whether these users are going to stay or they're going to find yield opportunities somewhere else, or perhaps, a new wave of yield opportunity might come with a new class of product that we haven't seen so far. But, over time, what we're seeing is that education might be a key aspect here. And to educate the users of the benefits of using these decentralized financial systems that let you access yield, lending, and other mechanisms that you would not have access otherwise in real world, correct? So that's where right now we have this interesting crossroads and challenge to basically onboard these users beyond the yield opportunity. And what we're seeing is that the ticket sizes are obviously small for retail users, and therefore high gas fees, as we've seen on Ethereum, are a very sensitive issue. But that should be corrected over time in the coming 6 months to 1 year, where new scaling solutions are coming into play. Obviously, as we've seen, new scaling solutions means more blockchains, more ecosystems to explore, and probably a somewhat more confusing experience for the user. So we probably will have to team up together in the industry to make sure we bring, an easy path forward for the user through education and more content.
The core mechanism for DeFi, as we look at right now, the projects is yield farming. We would want you to or need you to elaborate more on that.
So let's go step by step.
Sure.
So usually as a user, you have a centralized exchange where you go there and, you can buy and trade any cryptocurrency or asset that you want. Now, someone is providing liquidity on the other side, usually the exchange along market makers, to be able for you to trade in and out of that position. Now, in decentralized finance, there's other mechanisms to enable that in a decentralized manner, where any user or investor can actually provide liquidity for anyone to trade with. And what that enables, basically, is a very efficient system in some cases for, let's say, decentralized exchanges. The question here is how do you incentivize these users to stay there and actually provide liquidity over time? And one mechanism was to provide incentives in the platform's native token. So you provide rewards, so the user stays there with their liquidity, and despite potential profits and losses that they may see over time with that position, they will maintain it because they want to get those additional rewards in the platform native token. Now, you may think whether this is sustainable or not over time, because you cannot always be giving rewards, right? So what we're seeing now is that some platforms rely on this mechanism to offer high rewards in the beginning, attract liquidity in the beginning, and grow really fast their own platforms. What happens is that when the new platform comes along and offers the same high rewards that the other platform has stopped offering, that liquidity migrates. So that is creating an ecosystem where there's a series of traders and investors who are basically seeking yield opportunities all the time across new platforms and offerings. And that is the basic concept of yield mining, or you can call it liquidity mining as such. And then there's other mechanisms that these projects have created, where you can take this native token and actually stake it or put it in a pool that will give you additional rewards within the ecosystem. In some cases, this is meant to create, less supply in the market and, enable some kind of scarcity within the supply. And in some cases, this is a very simple and effective way for a DAO to actually share their revenues with their community and those who hold their token by simply asking them to deposit it in a pool and giving them a percentage of the revenue.
But with that, we'll have to stop for a very short break. When we come back, we'll talk about Wyoming DOA crypto bill being approved by Senate. What does that mean for various countries? And what does that mean for the instrument itself after this break?
WazirX and CNBC TV 18 present Crypto, Digital Assets of the Future. WazirX and CNBC TV 18 present Crypto, Digital Assets of the Future.
Welcome back, and we are in the midst of a very interesting conversation with Eduard Jubany Tur. Eduard, this is about DOAs, and since 2017, people have been forming and operating DOAs. It hasn't received much regulatory support or recognition, for that matter, until Wyoming approved it and acknowledged it. How do you look into that?
So regulations, as you know, is something always in the back of our minds, especially for those who are actively participating in the ecosystem. So you can see it on two ways. One is as an effort to limit the freedom that DeFi is trying to enable and the overall crypto ecosystem. Therefore, for a set of core users within crypto, this actually goes against the philosophy and the ethos of the whole community, where generally you want less regulation and you want more freedom and autonomy to manage your own finances and life in general. And that goes in line with the origins of cryptocurrencies, with Bitcoin, and the entire ethos that made Satoshi Nakamoto, whoever that may be, create Bitcoin in the first place. Now, you can also look at it from the other way, which is any regulation enables more protection, more, let's say, less concerns about liabilities, and a more secure environment in general for the retail user and investor to operate in. So it's not necessarily something bad in itself, correct? Now, there is the talk in general that at some point with the new regulations around virtual asset providers coming online in several countries in the coming years, these DeFi platforms will have to install KYC processes and enable some kind of compliant approach. So this is, a challenge that remains to be seen on how it will evolve, because at the same time, the system is reacting in itself and is creating more mechanisms to enable anonymity, to enable self-custody, to enable decentralized governance. So it's basically a race in some way where both sides are continually building and evolving. But generally, as we've mentioned, laws like the Wyoming DAO bill that passed recently can be seen as positive developments, where all of a sudden you do have mechanisms to enable decentralized organizations to exist, despite having concerns that this goes against the ethos of the community.
Surely, compliance and regulation are two major pinpoints right now with various economies and countries as they themselves try to understand on what DeFi and DAO can do. But, apart from that, for a mass adoption for something like DAO, for DAO to achieve, would you also say that there are various technical limitations as well right now which need to be sorted?
You're correct. Even just something as very simple as being able to build a mobile app and put it on an app store, that is a challenge in itself. Because usually if you want to put your app into the mobile store, you actually have to register and provide some details. And as such, you're not a corporation that can capture revenue on that in the same way that any corporation would do. So those are limitations that you have right now in terms of yourself being a DAO and trying to operate as a decentralized community. At the same time, these are systems that are still evolving. So no one, not everyone has the ability to connect to a wallet on your desktop, set up and connect to the right blockchain, and then access the correct platform and make sure that they understand all the different concepts and interfaces that they find themselves in front of. So it's a lot of hurdles and steps that someone has to do in order to be able to access the ecosystem. And you could say that's why usually it has attracted people who have been in the cryptocurrency space for many years, folks who are developers and early adopters of technology. And this new wave of users that we've seen coming in has been able to access it because we already had retail channels to onboard them, as well as platforms who are really trying to simplify the user experience. But this is, issues that still remain in the ecosystem. And, it's a conceptual challenge for someone to say all of a sudden you can vote and participate in the governance of your bank. That is something that has never happened before.
I want to move on to other simpler things now. I want to actually ask you about cryptocurrencies also. The kind of volatile moves that we are seeing here and the kind of institutional, even retail participation, there is a whole FOMO outside. People do not want to miss out on this. How do you read the volatility in the cryptocurrencies itself? Is it a cycle? Will it keep happening like that? Do you see maturity at some point in time when it stabilizes within a range?
It's hard to tell. I think for most builders in the space, everyone tries to keep the approach of, continue building and improving all the different products that we can offer to our users. And as such, our focus is very much on working independently of any price movements to make sure that, gradually we're becoming better and better and better. Now, it's true that this volatility may have been affected by several factors. One of them could be what we've seen in China with the switch in terms of mining regulation and the acceptance of mining as such, Bitcoin mining in China. We're also seeing movements by the Chinese central bank to limit access to cryptocurrency platforms and make sure that their own banks and financial institutions will stay compliant and limit the ability of users to access these platforms. And something that many users outside of China are not aware is that all these Ponzi schemes and scams, still exist within China and several countries where you see people who approach aunties and let's say not the right target to invest in cryptocurrencies. So it's normal to see that at some point there's some backlash and control measures by the government. And we've seen these over and over again as a cycle, correct? Now, whether the price is going to go up or down, it's hard to tell. What we've seen is that there's institutional money coming in. That's no question about it. We've seen an incredible growth in retail users. We're talking in India alone, millions of users coming in with $40 billion in liquidity invested into the space the last year alone. So basically staggering figures. So, it's hard to believe that we're going to go back in time to the price level that we saw 2 years ago, and that we're actually, gaining escape velocity right now.
While there's so much interest in this, but the whole reason when we talk about cryptocurrencies and decentralized finance, clearly the debate seems to be shifting to the unbanked, to the capital hungry or capital starved small and medium enterprises. When we talk about DeFi, it's also about borrowing, lending, remittances, etc. How much of that market have we been able to target? What is the kind of adoption that you see right now?
So in the last few weeks, we've seen major DeFi lending platforms like Aave and Compound. And for the context of the audience, these platforms have more than $10 billion, $8 billion in liquidity as of today, offering specific products to companies to DAOs to entities who actually need to go through KYC. So you've seen that they're actively taking the steps for any business or existing, legal entity to access these liquidity pools and be able to, lending and access credit as such. So we're seeing these developments that are encouraging. Now, how would that trickle down into, let's say, a medium-sized business in a city like Indore or Kolkata? We still have to, see how that would be possible. But definitely the ecosystem is taking to that, steps towards achieving that reality.
Various readings that I have been doing and which suggest that 2021 perhaps could be very much the year of DeFi, the kind of adoption that we are seeing. And we might be looking at shift from that food meme coins to AI-fueled systems, which could radically change, empower people who hold these tokens. What is your own sense?
It's quite startling for, everyone who's within the DeFi ecosystem to see the power of the meme. But it's undoubtedly something that will remain in our memories for the coming years, how, these dog coins or food-related coins have risen so much and gained so much traction with the retail user, much to the surprise of even the cryptocurrency users themselves, as well as, the influence that actors like Elon Musk and other players in the social media space and tech ecosystems are having on the price movement. So, yeah, I think our hope is towards basically bringing in some of these learnings into the DeFi space and being able to incorporate that in a way that we can offer real value to retail users beyond a meme coin itself. So, yeah, we'll be step by step on that front.
Eduard, thank you so much for your time. Really appreciate the conversation and your time and joining us for CNBC TV 18. Thank you.
WazirX and CNBC TV 18 present Crypto, Digital Assets of the Future. Focus, ideate, innovate, enable.